very warm welcome to Moneycontrol.com. We are in conversation with Mr. R Dinesh, the newly appointed President of the Confederation of Indian Industry. He is going to be managing the tough job of balancing industry expectations even as he negotiates with the government. Mr. Dinesh, many thanks for joining us. A tall order for you. It's going to be a tough balancing act. How are you planning to go about it? What are the goals that you set for yourself for your year as President at CII?
Thank you. I think if you look at it, the focus for us is obviously India. We at 75 years of our history. Now, if you look at it, we are saying, how do we really look at India for the next 25 years? And as we do that, I think the core focus would be to build the competitiveness of Indian industry and manage growth and manage it in a sustainable manner. How are we making sure that that happens? One obviously is the globalization. It could be both inward investments, opportunity for Indian companies to grow overseas and people who invest in India. Second is making sure we carry everybody along, meaning the livelihood support, which we will work with, and generally build the competitiveness of the Indian industry overall. All of it is going to be done by the underpinning act of building trust. And I think building trust is not just obeying or following the laws, but making sure we go above them to work with every stakeholder and support them and make them, so to say, resilient for the future.
Fascinating. I want to ask you, Mr. Dinesh, about private sector investment. We've not seen private sector investment pick up as much. Capital formation has increased, but a lot of it has been driven by the government. Do we see that changing?
Rather than actually speak about what has happened in the past, let us look at what is happening as we speak. And I will also cover a couple of points as to why that may be the case, but that I will come to separately. Today, as we did our survey, we actually found, cutting across all sectors, the capex utilization has crossed 75%. So that is typically the threshold at which people speak about going ahead and making future investments. So if sectors like cement, steel, chemicals, and most importantly machinery sector is speaking in excess of 80%. And machinery 80% means that it is again going to capex formation or more capital formation. Okay. Therefore, those are all indicators for me that private sector capex is already there, so to say, to follow suit. That is from the manufacturing side. If you look at some of the service sectors, which all of us are aware of, whether it be the hotels or whether it be the airlines, I think today it is not a question of being able to, they are already running out of capacity, meaning 90-95% utilization is what we are speaking of. Yeah. So all of it, in my mind, bodes to the points to the fact that you are going to have private sector capex coming in, private sector investment coming in for capex in a significant way. If I look at what has happened or the most recent data which we have, which is the Q4, I think it indicates that typically, and this is again, I would call it anecdotal history, that it is anywhere between 6 to 9 months. So I think it is a very short period of time. At least you will see ground level investments. Okay. One more data point I will give you, which is based upon the CMIE data which had been published. Right. So there, in 22, the commitment to capex was about 14.7 lakh crores. But if you look at in 23, it is closer to 25.7 lakh crores. So it's a 75% increase in commitment. That is also one more indicator which points to the fact that private sector investment will come back or is coming back in a significant way.
Well, that is good news, of course. What are the estimates that you're working with when it comes for this fiscal? Do we see you revising your growth numbers considering the numbers that we just saw come in for the fourth quarter of FY23?
So it's a very good question because we were debating this before the Q4 data came in. And our focus was to be looking at between 6.5 to 6.7% as the rate of growth for FY24. Once the data has come in, I am more confident or more comfortable to actually say it would be closer to the 6.7 rather than the 6.5. What are the issues which we think we will face from the headwinds or the potential headwinds? Mostly are related to the global scenario, which we did face. So we are right now assuming that there won't be any more new geopolitical issues arising and the Ukraine crisis will not deteriorate in any further manner. We are also expecting that inflation, which has softened in the overseas markets, because as you know, we are all talking about high double digits where markets used to be at 1-2% inflation, which were never seen. I mean, maybe after the World War II, I don't think there have ever been such rates of inflation in the advanced markets.
Right.
But that has now sobered down to a more acceptable level. So our assumption is based on that, or the challenges which we believe we could face would be if those parameters change, because that will affect our oil price, that could affect the way the interest rates behave in the rest of the world. As far as India is concerned, we don't see any major issue except the monsoon. And right now that is also getting tempered by two facts. One is that every El Nino year is not necessarily reflecting in a bad growth factor for India.
Right.
And more importantly, IMD is saying that the El Nino could be made up by the Indian Ocean Dipole and the Julian-Madden oscillation, as they call it.
Is demand a concern for you or for the industry, Mr. Dinesh? Because for the numbers, from the numbers, what we see right now is that there has been somewhat of an uneven recovery in demand. We see demand for high ticket items growing at a much faster pace than lower ticket items. Do you see that trend playing out for this fiscal as well, or do you see that changing?
So what you say would have been true, and if you had asked me this question maybe in December, I would have actually not had the comfort to say yes, that's changed. But if you look at right now, and again going by the last quarter figures as well as what we have heard in April and May, if you look at two factors, one is rural demand has come back quite significantly, whether it be FMCG, FMCD, some of the automotive sector, etc. All of them are speaking about rural demand having come back. Therefore, it is, I think we should also not forget, as I said, that there were so many uncertainties in the last 3 years, not one, but many uncertainties happening at the same time, which may also have caused whatever was the negative in the interim period, but that's guesswork. But what we do know from data is that it is changing, and changing to the positive side, and especially from rural sector, and especially, as you said, the sectors like FMCG, FMCD, which are also being sold right across. So if you ask me, today that concern is very much alleviated, and coupled with the domestic demand going up, again the last quarter, if you look at it in April, May, you look at most of the sales, whether it be UPI usage, for example, I think we hit the highest usage, 14.97 lakh crore, if I remember right, which has never happened before. So that kind of a numbers, followed by the anecdotal evidence which we are hearing across all sectors, gives me the comfort that that's not so.
So private consumption growth was at a tepid 2.8% for the fourth quarter. Do you see that changing as well? Do you see a transformation there as well?
I'm not saying that, because obviously base effect is something which we have to see, but I do see it getting equitable and spread across, which means that could also increase. But to get to some 6.7% rate of growth, we do see that increasing as we speak, and April and May are bearing that out.
For the private sector to come forward and invest, what is it exactly that the industry now is hoping for? We've seen a whole host of reforms that have been unleashed in the past 9 years, but now to build on to this growth momentum, what are the specific reforms that the industry is hopeful for, which would prod the sector to come forward and invest?
So the way I look at it is, the transformative reforms, or the major reforms which have happened, or the solid foundation. As you said, there were two focus areas. I think first the government started with ease of doing business. I would say then the subsequent focus came into cost of doing business, because that's what really matters for making India competitive, both from a manufacturing sector and even from certain service products which we can offer. These two are the pillars on which have arisen from the foundation, so to say. So if you look at it, I think at least from industry perspective, you will always have improvements which you will continuously make, and even when you run companies, that's a focus. You say continuous improvement is the way by which you do it. So you will continue to make, I would call it, support activities and suggestions for making both ease of doing business and cost of doing business better. Do you need to do anything specific? No, because if I look at the infrastructure activity, and just again to quote one figure, 66% of the CEOs whom we had surveyed actually said it is reduced their cost of doing business. 85% of the CEOs whom we surveyed said that it has reduced their time of doing business. So that is a very significant number to speak about, and that's why I said infrastructure, spend on infrastructure has been the biggest, I would call it, action by the government during the last 3 years, which is making both ease and cost of doing business coming down for us. So to strengthen those two pillars are what I think we want the government to be continuing to focus on, and every recommendation of ours is that mooted towards that. Having said that, because you said what would be specific areas, I would say that, for example, the globalization, meaning both from a trade perspective and also from a promotion perspective, we are definitely saying that speed up the FTA signing with some of the current negotiations going on, so that we actually get access to those markets also for further export. While there would be some giveaways, I think it is beneficial for industry as a whole to be able to make that happen. Obviously, on the other actions, I will speak about separately, because that may be more industry led, not from an ask.
So, I wanted to talk to you about labor reforms. That has been a very contentious issue and has been a very prickly issue. It's politically also quite fraught with controversy. We've seen states like Karnataka, Tamil Nadu introduce a lot of reforms in the labor space, which has not been met very kindly by the unions. But do you see that as the way forward if India wants to compete and take advantage of the China +1 strategy, which is what clearly the states are hoping for when they're pitching for these reforms?
So, if you look at it, the 4 new labor codes, which I think the government had spoken about, is something which CII is definitely welcoming and saying that should happen. I wouldn't want to comment on specific changes which maybe a Karnataka or Tamil Nadu would have done, because I think they were obviously forward-looking steps.
Sure.
But maybe you could tinker with them to make them more better, or whatever may be the case. But having said that, I think the fact that India needs to be more competitive, and therefore every law and every support, like I said, infrastructure is one element of it, and labor will be another element of it.
Right.
Is something which is definitely a focus for CII. So I don't see that focus changing, and that is our continued recommendation, to make sure that consensus is built up and we are able to make sure that labor productivity, and let us not forget, this is in the interest not of industry, this is in the interest of India, this is in the interest of the people who are working, because that is what is going to create more jobs, that is going to create more investment. So I think there should be, actually the narrative should not be that this is an industry ask.
Okay.
I think this is a requirement for India, this is a requirement for people to be employable, to be more employable, and for more investment to come in.
Talking about, this is an ask for India and this is what India needs, I want to talk to you about the tax administration currently. We've seen a very renewed and a fairly aggressive tax administration, and some of the notifications and laws that have been implemented, including TCS, including the angel tax issue that's spooking investors quite considerably. Also, using AI to identify what they say is, they're going after money that has not been declared and so on and so forth. So a lot of small and medium-sized businesses are also coming in, in the whole net of tax evasion or just investigations. Is that the right approach according to you, or is that something that's hurting the business sentiment, especially for the small and medium industrialists?
So I think if you look at first GST as a reform, I think the base was to be able to make sure that the whole country gets, I would call it, formalized, not in a wrong way, but in a positive way. And I don't think using that data, meaning using available data to track and find out, is something which is carrying people who are doing business normally and doing properly. So I don't see that as being a factor which is a worry.
Okay.
Obviously, specific terms like when you implement, let us say, angel tax or issues like that, which CII will continue to discuss with the industry or will discuss with the startups and raise for sure. But they are not something which are, I would call it, the equivalent of a transformative or the opposite of a transformative reform, which is going to affect industry in itself. So I think it is business continues as usual. You will keep making the necessary recommendations if you need some changes. But this is a government which actually listens when you make a recommendation. So I think it's a question of presenting facts if you think that's a factor to be able to look at. I don't think in my mind, I have not heard anybody saying because of that, I'm afraid of doing business.
Okay, so Morgan Stanley came up with a report saying that India has transformed in the last decade. You, CII, you as an industrialist, you're constantly interacting with investors. What is the perception? What is the view that you are getting? Has India been able to capture that spot as an alternate destination, investment destination to China?
Okay, let me give a 1 minute answer, and then I'll give you a counter to the point you're making, which is very important because the narrative again has to change. But I think the answer is 100% yes. I think India today, at least in the last 6 months, wherever, I would say last 1 year, wherever we have had interactions post-COVID with investors or investment community in developed markets, you hear all positive statements, comments coming about what is happening in India. And like I said, that's the reason why I said the transformative reforms were the foundation.
Sure.
Because as they were happening, there were obviously a lot of issues, we wanted it faster, etc. But once they have happened and you actually see the visibility of that, it's not we who are speaking, it is outside investors who are looking at it and saying, wow, you were able to do this. And secondly, the focus on infrastructure, which took place, I would call it in a way contrarian to initial expectations, has made the world stand up and take notice of India.
Okay.
Because they are seeing this as genuinely the core focus of the cost of doing business initiative, which I spoke to you about. That's A. B, while yes, as from a geopolitical or a geostrategic angle, people may be looking at India as an alternate to China, I think the India story is independent of China. The reason why people are looking at India is because India is maybe one of the larger demand creating economies of the world, has the highest growth rate, has all the other strategic advantages from a production side or from a manufacturing or from a market side, and therefore people are looking at to invest in India, and that is how I think we should position India. The initial talk can be as an alternate,
sure,
but I think beyond that it is going to be about, I'm making an investment here because I see a potential in the market, and as I have made an investment here, then I get an opportunity to increase my exports out of it.
What are the big things that you feel are working for India right now from a business perspective?
Okay, like I said, first is the cost of doing business. And that focus has resulted, because whether it is logistics cost or I would call it the ability to effectively utilize what we have, the biggest advantage is that the infrastructure spend and the utilization of that infrastructure. So the Gati Shakti initiative is all about making sure infrastructure is, the spending is monitored, done well and done fast, and the I would call it the logistics policy, etc., to those which are following through on making sure effective utilization takes place. The second, which is I think maybe the visible gem of India, is the digitization initiatives.
Interesting.
And that is something which today, most developed markets in the world, maybe say leaving aside a few, all of them speak about saying how can we collaborate, how can we work with India in the way in which digital inclusion has taken place, and that's not just in fintech, it is cutting across various sectors, and that's a unique advantage and a unique positioning of India as compared to the rest of the world.
Okay, your presidency also coincides with India's presidency at the G20. What is it that Indian businesses are going to be pushing for?
So I think along with the G20, we have the B20, and that's something which CII is making sure that we deliver a successful B20, and which will lead into the recommendations for the G20. So that's something which we are working on, and that's an outcome which you will see shortly. I don't want to precede what is going to be the outcome, because there are various working groups.
Any specific issues or any specific incentives or any specific points that
No, I think there are various tracks on which this work is going on. There are actually 9 tracks.
Right.
And like I said, I don't want to cover it as part of today,
Sure.
because you will hear about it separately and how each of these 9 tracks are proceeding in the implementation plan of that. But having said that, I think the one natural outcome of the G20 is going to be how the tourism sector is benefited from from an India context, which I
Right.
think has been right from the PM, everybody has been speaking about. And one of the core focus areas of CII is also to work on the tourism sector,
Okay.
to make sure that, I think our number we have said is 30 million tourist arrivals by 2028. So I think we can get there. And again, going back, the infrastructure supports us. And as we continue to invest on the infrastructure, you will find the ease of arrivals, the ease of people movement,
Right.
all make a difference.
We've seen a lot of investments come in under the PLI scheme. India has become a leader in mobile phone manufacturing. We've had Foxconn coming in. Tesla is in talks. I want to get a sense from you that, how does this work when a company like this comes and sets shop here? How does it transform our supply chain economies? What's the spiraling effect that happens? And going forward, what are you expecting? How are you expecting this space to evolve?
So I think it's a very good question, because what happens is it's always a question of a chicken or egg situation, right? You say there is an ecosystem available, therefore people come in and invest.
Absolutely.
Or you say there is an investment taking place and therefore an ecosystem evolves. I think in a way, a large company coming in who's into manufacturing either a cutting edge product or a new age product helps you in establishing the ecosystem.
Okay.
And once the ecosystem establishes, that becomes a win-win. So, as I said, that answers the chicken or egg situation in a
Right.
much easier manner.
Right.
But having said that, it doesn't necessarily have to be that only one company will make a difference.
Sure.
You will have to follow through with various other entities. The second aspect of it is the upgradation of our component industry and the tier 2, tier 3 industry, which follows whenever one sector starts to make investments in. And that starts with supply chain companies, that starts with tier 1, tier 2 manufacturers, and they start partnering with either partnering or getting access to new technology, which they would have otherwise lacked. So again, it's a similar question of what's the best virtuous cycle,
Sure.
and this becomes then a win-win right across. But having said that, I think what is important, thus the technology gets internalized into the Indian context.
Right.
I would call it Indianized in its solution, because all of us know India has its own different ways of doing, or let us say like driving, or whether it is management of a way in which a phone is used or what is not used.
Right.
And that is going to be peculiar for every country. And considering the Indian market, that is where I think India has an opportunity
Okay.
to what I would call build the Indian solutions for the world from India, which is made for India.
Okay. So what are the new sectors that you are betting on?
So as we speak from the CII perspective, obviously we are taking steps to support what we call as future technologies. In that we are talking about how AI can be supported, but at the same time done responsibly,
Sure.
so that we make sure that the right investments come in, but at the same time done in a proper manner. We are forming a task force on semiconductor, which will support the government initiatives on semiconductor. We have a green hydrogen machine, which is going to be further supplemented and support the activities of the government. And what we are talking about from an advanced manufacturing side, in fact Mr. Narendran is going to lead that, is to make sure that we look at what are all the subsectors, how can we work with, as you said, different companies or the government to make sure we facilitate and support that. Finally, we are also going to be doing cost of doing manufacturing sector-wise,
Okay.
so that we can work on and prepare, so to say, a future plan with the government and see that they become more competitive or more better off than what would have been the case.
Okay. My last question to you. We just got the GDP numbers. During COVID, when different measures were announced, a lot of interventions were announced, there was a lot of debate and discussion around India's strategy. This time around, which was all countries adopted their own approach to handling the pandemic, the economic fallout, which was unlike what happened in 2008. So I want to get a sense from you on, do you think this is a validation of sorts coming in on India's economic management during the pandemic, and going forward, do you still see space for a stimulus to boost demand, considering this is a pre-election year, do you still see that, maybe the government could or should consider a stimulus, something that we've been asking for a really long time, but clearly that's not happened?
So, I mean, leaving aside CII view, I was one of those who was actually asking or thinking that there needs to be a stimulus at the time of COVID. And I think I'm glad I'm proved wrong, because I think the government stood steadfast and said we will focus on infrastructure and we will make sure that spend actually propels or makes available a demand growth. And to tell you the truth, I think that is really what has helped India today. Because the rest of the world, or India has become the envy of the rest of the world, because we have the powder dry to be able to not affect our fiscal deficit, even though it did get affected during COVID year, which for everybody it did, to be able to manage that and kind of come out of it fastest is because of that. And like I told you just earlier, that focus on infrastructure has become our single biggest, so to say, advantage when people look at a potential opportunity to invest here. So that has become a double benefit, not just made the domestic demand increase. So then the second part of your question, do you believe there's a room for a stimulus? I don't think that is needed right now. Already India is the fastest growing economy.
No, if not a fiscal stimulus, maybe a monetary stimulus? Should the RBI be hitting the pause button now?
So that we have already said, because let us step back. I think RBI has been maybe the one focus has been to make sure the balance is there between growth and inflation. Inflation is bad even for businesses because then the cost of inputs goes up and obviously that also affects demand. So you have to balance inflation and growth. I think what they have done so far and the pause is something which we definitely are very happy with. In fact, our recommendation today is that the pause should continue. The only change we are saying is the stance which they had officially taken was that there could be rate increases. We are saying change that to neutral so that the perception is that hopefully if inflation doesn't change or if it starts dropping, then there could be a rate reduction. So again, I don't think there is any room for complaint on that approach. In fact, I would say we endorse that.
Have we put inflation behind us?
Good question. I think in reality, you can never know till history proves you wrong. But as of today, yes, I believe so. Because most of the factors, as I explained earlier about the global factors or about the domestic demand, you see them having come to a level where I think there is no major surprises unless a monsoon failure or etc. happens.
Sure. All right. Thank you so much, Mr. Dinesh. It was a pleasure talking to you and we wish you the very best.
Thank you. Likewise from my side.
Thank you.
Thank you.